Hey everyone, welcome back to Corporate Decoder, the place where we dig through the documents that companies don't necessarily want you to read. Today we're diving into a filing from Robinhood, and let's just say it involves a bigger credit line and a new face in the boardroom. Is it all smooth sailing for the trading app, or are there hidden rocks beneath the surface? Let's find out. This report is a Form 8K, which is basically a corporate breaking news announcement. It tells us about important events that have happened at Robinhood, the company that lets you trade stocks and other investments on your phone. This particular report is dated March 2025. First up, Robinhood has a new credit agreement. Think of it like a souped up credit card for the company, but with a lot more money involved. Robinhood Securities, which is a part of Robinhood, now has a credit line of $2.975 billion, more up to $3.975 billion. So when conditions are met, this agreement replaces their old one from March of 2024, which was for $210 at certain conditions are met. This agreement replaces their old one from March of 2024, which was for $225 billion. So when conditions are met, this agreement replaces their old one from March of 2024, which was for $225 billion power. What does this credit line mean? Well, it gives Robinhood more flexibility. They can use it to cover unexpected expenses, invest in new opportunities, or just have a safety net in case things get tough. The interest rate they pay on this borrowed money depends on a few things, including something called the daily simple SO and the federal funds effective rate. Don't worry too much about those terms, just know that they're tied to how the broader economy is doing. There are also fees for keeping the credit line open even if they don't borrow any money. It's like paying a monthly fee for a gym membership even if you don't go. This credit agreement comes with some rules. Robinhood has to maintain a certain level of financial health, like a minimum net worth. They also can't take on too much debt or make big changes to their business without the lender's permission. These rules are in place to protect the lenders who want to make sure Robinhood can pay back the money it borrows. If Robinhood breaks these rules, it could be considered a default and the lenders could demand their money back immediately. Now, let's switch gears and talk about a new face in the boardroom. On the same day, March 21, 2025, Robinhood appointed John Hagman to their board of directors. He's also joining the Safety, Risk and Regulatory Committee. Basically, he's going to help Robinhood make sure they're following the rules and managing risks properly. Who is John Hagman? Well, according to the filing, he's an independent director. This means he's not an employee of Robinhood and doesn't have any major conflicts of interest. He's there to provide an outside perspective and represent the interests of the company's shareholders. Mr. Hagman will be getting paid in accordance to Robinhood's policy. The filing also mentions that Robinhood has an agreement to protect him from certain legal liabilities, which is pretty standard for board members. There's nothing mentioned about any special deals or relationships that led to his appointment. Finally, Robinhood published a blog post announcing Mr. Hagman's appointment. They also mentioned that they use their investor relations website and newsroom to share important information with the public. So if you're interested in keeping up with Robinhood, those are good places to check. It's worth noting that the information in this blog post is not considered legally filed with the SEC. It's more like an announcement or a press release. This means that Robinhood isn't held to the same level of legal responsibility for the accuracy of the information as they are in their official SEC filings. Now let's step back and take a broader look at what this all means. On one hand, Robinhood getting a bigger credit line could be seen as a sign of strength. It shows that lenders are willing to give them more money, which suggests they believe in the company's future. It provides a bigger financial cushion. On the other hand, it also means Robinhood is taking on more debt, which could be a risk if things don't go as planned. The increased credit line also suggests a higher risk appetite. The appointment of a new board member could be a positive thing. It brings fresh perspectives and expertise to the company's leadership, especially since he will be helping with safety, risk and regulatory matters, which means Robinhood is facing scrutiny and may need a specialist. Overall, this filing gives us a glimpse into what's happening behind the scenes at Robinhood. They're increasing their financial flexibility and adding to their leadership team. Whether these moves will pay off in the long run remains to be seen, but it's definitely something to keep an eye on. The company has struggled to achieve profitability and has expanded its services. Thanks for watching. If you found this Corporate Decoder breakdown helpful, please give it a like, leave a comment with your thoughts on Robinhood, and subscribe for more deep dives into the world of corporate filings.